There's also a bunch of bad deals in uranium though right now. There's gonna be the number of that is gonna start
And
increasing as
probably
well as there.
the bad deals can still make you a lot of money too in the short term. Everything should make sense. You shouldn't buy 20 names because you need diversification. You should buy one thing that makes sense at a time with not too much capital that you'll be wiped out if things don't work out. I don't want to poo-poo anything. Most of the space is untouchable. Like you don't want to buy this is not where you inherit your family fortune and put it all into junior resource stocks. They're all serially diluting pigs for the most part, with occasionally exceptional outcomes. But only three times a resource stock is going up is one, if the commodity prices are rising, two, if there's a real discovery, or three, if the stock's being promoted. There's not a secret that the greatest amount of wealth in the resource sector accrues to prospectors, brokers, and promoters, right? That's just a fact. That's the inside.
All right, Tommy Humphreys, an aspiring amateur golfer, professional caddy, as far as I understand it. Some may say a micro influencer, not his wife though.
Sub
Founder of
micro.
a, you're also founder of a few websites to our beautiful space, mostly known for being the founder of CEOCA, so a message board for addicted gamblers. Sold to Goldspot Discoveries, I believe, called Earth Labs. Today, also a public company. They own the Northern Miner as well, if I'm not mistaken. He sold in 2021 for $17 million. I believe it was sort of a 50-50 split in shares and cash, but both ways, that's a lot of money for what, a 35, 36-year-old man at the time. What did you do with the money, Tommy?
Well, the first thing is I gave a generous chunk of it to Murat, the my partner and CTO, who was the visionary behind the technology, and he deserved every penny of
Mm.
it.
How much?
Um, you can ask him that, but pretty good chunk. Like
Okay.
I on the books it was developed, like it was a very modest thing. We started with 2,500 bucks, and you know we had it. It was owned by my company, but we did a sort of a reorganization at the conclusion before we sold it and put it into a new company and created some ownership for Murad. And there were a couple of people that helped him that were small shareholders as well. But what I did with the money, I've been spending it pretty good. I just got back from Disneyland and took my kids there. I've been spending it. It seems like everything's getting very expensive, and I don't know if you feel this way, but being on the road, today's my first day back in the office in two
Mm.
months, and being on the road, spending US dollars, it's like a dollar, 1.4 Canadian, and everything, particularly at Disneyland, is just so expensive. And I feel like I saw psychologically, I noticed like when I see something that seems like it's value, I now feel like I should spend the money because it just feels like inflation is much greater than reality than it's reported, and that the velocity of money, at least myself, it feels like it's picking up. I feel like the money I have is getting watered down.
Mm.
And um,
Well, but what are you buying then? I mean, that's because
well,
you're also buying other stuff, not only Disneyland trips.
well, like I got this sweater a couple days ago. I really like it.
It's a
And
good sweater.
yeah, no, I like to like I like to save money. And when CO sold, I already had like this great brief bull market in 2016, but I was like you, making content before in a bear market. And I remember went around the New Orleans investment conference in October or Halloween 2015, and there were like there was nobody there. It was just me and the companies, it seemed like, and I was making investments in some of these issuers. And when the market turned briefly in 16, I was in the chips for the first time. So I'd been living modestly and created some value in that 16 rush, and was involved with starting a few companies that got better. And I used to pride myself in saving most of the money that I had made. But you fast forward, start a family and have children, and expand your territory, and all of a sudden, my yearly burn rate is now the monthly, and it's showing no signs of slowing down. But I like to enjoy my favorite thing to splurge on would probably be playing golf with friends and a golf
Mm.
trip somewhere fun. Um, but I like to buy real things like real estate or something like this. Not that this is big value, but I like tangible investments. I like my aim with most of the value that I created was just to preserve it the best I could. It's very difficult it's been difficult in my experience to get a great return on my conservative investments. So I'm just trying to preserve what I have through a bit of diversification and then continue to speculate with a smaller, more aggressive portion of my capital in the resource sector and in penny Canadian stocks and that's where I'm trying to create the return above the average. And so I'm spending the money on some speculations in small public companies and private companies and asset transfers. Like the resource space is like musical chairs. These projects are always changing hands and new companies are starting and fading away. And I'm trying to pick my spots with um, probably 10% of the capital I have. It used to be 100 in that space, but that's where
Mm.
I'm focused. That's where I'm excited. And when I realize a great return there, I will probably take it out of the space and put it into more real things. Um,
Okay.
and just trying to prove to myself that I can do it again. And so hope that answers the question. If you have a follow-up, I'll be happy to
Sure.
answer.
Yeah. It's also
But
worth noting that you have three ladies in your life helping you. Well, it's actually four because your dog's female too. So and then soon to be five,
I
as far
have
as I
my
understand.
mother as well, and I,
Okay, so you
I,
got a bunch
I
of ladies helping you spend that money. That's always nice.
absolutely. I have, yeah, two daughters under 4 and a third daughter on the way and a wife and a mom and a dog and everybody's we're all sharing it. But I'm very
Good.
fortunate in the family department.
Yeah. Well, good on you for making enough to have to share, basically. What's the saving for you? Because you said you're a saver, and then you also mentioned a great return. Those are two things that I'm going to need you to define for me. What is saving for you? Is it saving like cash on a savings account, or is it gold, or is it what is it?
I mean, like I I don't expect to beat the world with the majority of my capital. I just want to preserve it, like I said. So I I originally looked at this website called Tiger 21 and it was like a survey of super rich people. And I'm not saying I'm that, but I found this site when I was growing co.ca. I liked the content they were creating. I've always been obsessed with financial content. And Tiger 21 would publish a quarterly asset allocation guide of what their super rich investors were doing. So like to join Tiger 21, you needed to have $30 million or something like that. And then you'd answer the survey and they would show you how the average rich person has invested their money. And it's not surprising. It's, commercial real estate, personal property, big stocks, debt instruments, precious metals, a little bit of Bitcoin, third-party fund managers, venture capital, all kinds of stuff. So I've tried to model that a little bit and just be diversified and accept a modest return for the majority of my capital. And if you want an outstanding return, you have to create a business or take excessive risk to do it. So that's with the smaller uh, amount of capital, and also like that's what I'm going to do with my sweat,
Hmm.
my time.
Hmm.
So.
What is then great return for you?
Well, a great return is like, starting this, giving Murad a $2,000 deposit check in 2003 and selling it for $17 million. A great return is, I mean, if you, I think it's difficult to expect more than 6 or 7% with safe capital, and my expectations are low with that. But what's possible with risk taking is really the sky's the limit. I mean, there's two different things. There's wealth preservation, and that's what I'm focused on with most of my savings. But wealth creation is is risk taking and sweat equity, and there could be a speculation on a resource stock that you could make 300 or 400% return in a few months, or it could be starting of a new company where you could get tens of thousands of percent returns possible. I've been fortunate to have uh, a few, I think maybe even like five, over 100 times return investments, and even had the privilege of selling some investments that went on to return that much before selling them before they moved. So there's incredible wealth creation possible if you take risks, and you know that it's not easy.
Well, I know that it's not easy. I don't know if it's possible because I haven't done it yet. I've
It's
heard that it's
simple, but it's
possible,
not
but
easy. It's simple,
sure.
but not easy.
Yeah. Well, I'm still to see how realistic it really is or how probable it is, but I know that it's possible. Sure. What do you
I
said
was like you
10%?
once. I was like you once. Like the first 5 or 6 years of starting CO.ca, I had no idea. Like no stocks doubled. My first, I was 20 years, or sorry, 16 years of having bought my first stock before I realized my first double. Like 16 years. I was like pretty obsessed with it. Um, and I didn't know or believe. I kind of believed, but then like the sector turns like a freight train. It happens so quickly and so dramatically that then once it happens to you, which I'm certain it will, you'll be like, oh, yeah, it's now I have the faith that it's going to happen again. You've heard the quote before, the a resource bull market is like pouring a bottle of whiskey into a shot glass, and the whiskey just flows all over the table. And I think that's the case with money, because there's so few good opportunities here. But it can happen. Have faith. Hope to be there with you when it does.
It's also timing, right? It's so far because well, the worst part for me, and I don't know why we were talking about me. We're here to talk about you, but the
I'm
worst part
interested.
for me is that well, like for example, I caught the uranium bull market. I was in a very small form in uranium since 2018. But when I really started, when it would really started moving and I saw it moving, I was like, oh, this thing is actually going to move. Let me just take all the money that I have, and I had a diversified portfolio at the time. Let me just take everything, sell the car, sell everything, and let me just buy into my smaller positions that I have right now on the way up in 2021. And that happened to be the top, excuse me. I wish it was the bottom. It was so I top ticketed basically. I'm still down. So I caught a good market and I'm still down. So that's painful. But it's teaching me that it's mostly about timing, and it's probably going to be the same if I have a good hit. It's probably going to be the same on the upside, as in selling at the right moment is probably important. So I'm assuming.
That I've said on online before, like that all investors start as prey and gradually climb the food chain. And every person, like for me, like I started CEO.ca, I started my career in the resource sector. I had a blog before, just it was like TommyHumphreys.com at the absolute height of the market in like January 2011.
Mm.
And I think we're drawn into the space at the wrong time. And then the question is, if you're young and persistent, do you stick around till the miracle happens? I had one of my first uh, big bets in the space. Like it was a large percentage of my capital, more than I should have. I was greedy, and within a few months, like I think I was down 85% on the position, and I got wiped out by it. Um, so you're not alone in doing that, and it sort of makes you smarter and stronger, and maybe a little bit more. Maybe you don't sell the car next time, and just it's normal, I think.
Yeah, and it's just FOMO is a big thing for me. We when wife and I bought our first bakery, we overpaid massively for it. We could have paid half, but we saw it and we were like, "Oh, somebody else is going to buy it. Let's just give them everything that we have right now." We just literally gave them everything that we had at the time, and we overpaid because we thought someone is going to buy it. It's going to be gone. There's not going to be any other opportunity like that one. And so
Was it
FOMO.
a
I mean,
bad deal for you?
what's that?
Was it a bad deal for you?
In the end, right now, it's working out to Like I'm not gonna lose money in the end on it. I'm actually gonna have doubled the money that I put into it. But really, over when did I buy it? 2019 to now, so what, 4 years a double. It's not horrible, but at least I'm
But
not losing money.
you get some income out of it in the meantime.
Yeah, for sure. But I also work, 12-hour shifts, 7 out of 7 in the bakery, and then doing this to the side. And oftentimes I'm thinking about what could this online thing have been had I not done the bakery and had I worked, instead of doing 6 hours on this and 12 hours in the bakery, doing like 18 hours on this, would it would have been different. But
I have lots of those like hindsight theoreticals, and I don't know. You will know intuitively what you should do to change if you need to, and you can't turn back
hmm,
and
that's true. Yeah. But what else? You told me 10% juniors. What else is where's the rest of that money? We're trying to
um
track it down here.
I have like I own the office I'm in. I have some
Hmm.
I have I think it's a cool commercial site not far from my office here, which I collect some rent, and I have some larger cap stocks and preferred shares, and I have some investments in credit funds and index funds, and I have another investment manager that I've allocated some money to. I own a healthy amount of bullion and paper and physical, and a little bit of crypto and
Hmm.
personal property. Like that's my guilty pleasure is houses and renos and so I have a house and a cabin in Whistler, the ski place that we don't get
Nice.
to enough. And what else? There,
I'm kind
you
of
know,
hurt that you called Whistler a ski place. I was hoping you're gonna call it for what it is, a Whistler bike park. But go on.
it's a great place year round, but I hate to report it's been 4 months since I've been there.
Hmm.
And anyway, my eldest is starting ski school shortly, so we'll be up there every weekend starting soon after Christmas. We haven't got the big dump of snow yet, but I'm excited to ski. And are you a skier?
I am an aspiring skier, but it's a
Me too.
financial question as well. So no, I'm not.
Yeah, yeah. Well, it's fun. So, a combination of just like personal property, the boring stuff I read about on Tiger 21 and venture businesses and starting some of my own projects and yeah, I think that's where it all went, you
But
know.
so the bulk of it is real estate. That's what it comes down to.
Yeah, I would say personal property is not really investment, but I'd say I'm fairly equally split between commercial property and more conservative securities. I
Okay.
think conservative is such an oxymoron. Like you think you're taking less risk with larger cap stuff, but returns are so marginal. But I try to balance with more liquid and less liquid, and there's some yield on treasuries now, and have some liquidity in case something comes up, like the right bakery or something to
Don't.
buy. I'll call you if I do, because there's
I'm not
nothing
gonna
more
pick
valuable
up.
expert insight, right?
I'm
Uh,
just not gonna pick up. It's tough. No, it's not. It's not as nice as you think. There's a rule of thumb that we employ is that for every $1,000 in revenue that you get to keep $5. So margins are pretty thin. And you have to. Well, there's a bunch of other questions. Not what we're talking about. I should start a podcast about bakeries. But so what I'm thinking about is obviously that 10% in the genius. That's what I'm really interested in learning about here. And but so you're well connected though, and so I'd imagine that helps, especially given that like you've co-started a venture with Frank Justra, um, that was Hive blockchains if I'm not mistaken. But you've also just been to his house. You visited other billionaires, Porter Stansberry most recently, and on and on and on. And so I'm sitting here, a 20 something nobody in a forgotten city in a forgotten country. Like what do I do next if I want to improve my returns on that 10% junior portfolio? And like would it even be 10% for you if you were in my shoes?
Well, I was exactly in your shoes. I was 27 when I started CEO.ca, and it was 100% in the resource sector. And I knew I could. I didn't have much to start with, right? I think I had 4 or 5 thousand bucks when I started the site and paid 2,000 for the domain, or three. I can't remember exactly. Um, but being all in a space that's like that with not a lot to lose is a beautiful place to be. Um, the 10% now, it's like I don't know exactly what it is. It changes. Um, like it's not like I have a hard rule, but there are different times. Like right now, intuitively, I feel like I should be scaling up my speculations because I don't know, things are starting to get cheaper and like the commodities seem like they're doing better. Markets kind of perking up generally. I just feel like intuitively I should be leaning in a little bit. So I'm more exposed than I was a year ago or 2 years ago. But in 2021 when that market ripped, that's like my philosophy is generally I haven't experienced all different market cycles, but it's like if everybody's rushing into the space, that's when I'm falling out a little bit. And so in 2021, that was an incredible, shocking bull market where I went from thinking I would be selling everything from COVID to what can I buy with the precious metals returns I experienced in that late 2020, early 21 year. So I think you plant your seeds in the depths of the bear markets and you reap your harvest when people are interested in the space like that has worked in the last 10 years. That wouldn't have worked during the bull market of the 2000s because it just kept going and going, and I haven't experienced like a persistent commodities bull market where I've still done very well. Everything, I think you always have to change your approach. But if I'm you, I am you. I have been in your shoes, and I had no connections in Vancouver other than, I knew people, but not in the resource space. I was a web designer, but Frank Juster, my grandparents lived on his street, and they had this little cottage that was 80 years old and nothing fancy. And over a period of 25 years, Robert Friedland built this house on there. Actually, he bought one, and Frank Justra, and I'm sitting there as a kind of a greedy kid, and I'm like, my God, what are they doing for a living? Because like I want, I want one of those, and I certainly can't afford one of those houses, but that gave me some exposure to it. I think I think you have a hugely powerful platform and access to people and a reason to be in the space through media, because that's what I did too. And YouTube is such a phenomenal distribution channel. It's the biggest platform in the world. You say you wish you didn't buy the bakery. I say like I've done interviews since 2011 and 2010, and I don't have one home for them the way that you do. And I wish I could go back and put all of them in one YouTube channel and one podcast. And how big it could have been today, coulda, shoulda, woulda. But the reality is, I knew nothing and nobody, and I came in and I started making content like you are, and it opened every door possible. Look, how many times have you had Rick Rule on? Like people want to share, people want an outlet. It's such a niche, messed up little sector that people are desperate for an audience, and so you have enormous leverage through making interviews. And if you add value to people like Tyron, for example, who's like incredible. This is Tyron Breitenbach from Eris. He, he has been a research analyst and he's a geologist and he's been an investment banker. And you're giving him a platform. Do you don't think he's going to take your call with an idea or a question about something that he can give you expertise on? And that's like triangulating relationships and context about projects through the network you're building. That's why content creation is a superpower in our sector.
Right.
And I think, you just keep doubling down on it
Mm.
because it's really valuable. Like I actually wish I had your channel, you know. But I'm starting again, even though I have realized the financial goals that I started out with. I am writing again because this is at thebigscore.com. Please subscribe. You'll love the stories. I'm writing again because it gives me a reason to be tuned in. If you're like focused on the sector every day as you are, then you see everything and you've got a desire to know what's trending and what's breaking out and who's who. And so like the more I write, the more my phone rings, the more I'm plugged into the space. And I think I would be doing exactly what you're doing. I
Mm.
think now moving up the food scale a bit, a food chain a bit, when you know all these people and you know that um, relationships and projects, like what a mining issuer is, people, projects, and capital. I didn't come up with that. That's from Norm Keevil, the founder of Tech Resources. People, projects, and capital. That's the three things. And there's so many issuers that have forgotten projects. They just aren't getting any value, and particularly in larger cap companies, there's great advanced projects that everybody's forgotten about, that if they were in a junior would be really interesting. I think that's what Frank Juster's career has shown, is like pulling development assets out of like larger companies and building momentum around developing them. I think that's been his sweet spot. But the trading of projects, the expertise that your network can give you, and the starting of new deals, like they're tweeted this morning, like up on mystery, down on history. But it seems like a lot of speculators rush into new mysterious deals, and like old, more advanced known ones struggle in the market. But I think a lot of money is made in the formation of new companies and new ideas, and there's only three things that go into doing that. And so, how do you use your network and your knowledge to see something, to see a pattern or opportunity um, that others miss? I think that's where magic lies,
Mm.
and you can do it.
Well, so yes, I agree, and that's what I'm hoping for. That's why I'm doing this, of course, for a bunch of other reasons, but of course that's
Well,
not everybody,
you're
right?
attracted to difficult business models. Big
Exactly. Yeah, that's
junior
just
mining. You might you might need to rethink
I
this.
like hurting myself. That's why I'm in this space. But it's that's not everybody, right? And I mean, not everybody can start great. Well, this may be a wrong statement. I mean, if you look at the number of channels that have literally started copying that whole model, interview the same people, have the same titles, have the same questions or whatever, it's all the same thing. So people can copy it, but at a certain point, it kind
But
of gets tiring.
who will have the staying power, right?
Yeah. But what I'm also thinking about regular folks here, and like YouTube disappears tomorrow and I don't have it, and I don't have any leverage or anything like that. Can desktop investors even compete though against people, people getting founder shares at say a millionth of a penny and then listing at $1, for example? Like how am I supposed to compete with people like that?
Well, you can't beat them, join them, right? like um, like the greatest wealth creation in the world is starting a business with people. And if you start a business, you have founder shares, right? Or that's the way it's structured. So there's nothing stopping anybody from starting a business. And the returns that accrue to those people who start a business are much greater than somebody who's going to be a passive investor in the public. And it's just a different thing, right? It's not a bad thing that somebody founded a business and created value for themselves. But it's just as a regular investor, it's just a piece of the due diligence of like, how's your alignment with the people behind who started the company. Like the guys that created Coinbase and Uber and everything, they had founder shares, and like that doesn't mean that Amazon shareholders didn't get rich, despite the fact that Jeff Bezos didn't pay anything for his stock. Now, I'm talking about some real outlier technology businesses, but I created CEO.ca for regular investors to have better access to information, and I think it's the coolest tool for speculators in the Canadian market. We have the pulse of the message boards, and also the insider trading data and the CDR data and the stock charts, and we've tried to democratize access to information in that space. It's a different risk profile. It's a different story. If you want to be, there's not a secret that the greatest amount of wealth in the resource sector accrues to prospectors, brokers, and promoters, right? That's just a fact. That's the inside of the business. And in the book Fleecing of the Lamb, which came out in 1987. It's very negative, but there's some great stories in it. I think it was something like 50% of every dollar is flowing to prospectors, brokers, and promoters. Okay. So, um, so like if you want the greatest returns in that space, then you probably want to be one of those people. And if you are an investor in this space, then you need to know why would you suspend, skepticism for a specific idea or project. And, often it could be like the project or the company is so forgotten about, it's so beaten up that you see value in a restart, or you see leverage in the price that it's offered at, or the terms you can purchase into it. Um, and then if there's a simple discovery, that's where the great wealth is created in the space, not the insider harvesting of wealth, but the creation of it is when something is found or discovered. The only two times, I guess three times a resource stock is going up is: one, if the commodity prices are rising; two, if there's a real discovery; or three, if the stock's being promoted
Mm,
well. And the best returns probably in the middle of all three of those.
right.
But
Well, so
yeah,
that's the whole point. It's about people who are, doctors, lawyers, a sawmill operator, and they have, normal jobs, real jobs, as I like calling them, as opposed to podcasting. Like, can they compete? Do they have to participate in private placements, for example? Like, is that a must? That's something I talked to someone about today. Like, are private placements a must, in your opinion?
you haven't had Nick Germain on your podcast, have you?
I don't think so.
He's a mining book guy on Twitter, and he's got a great
Okay.
win this morning. Osino got taken out. It's like he was blogging about this thing relentlessly and he's made 5 times his money and told everyone about it. And Nick won't buy private placements. He's like, no, I want to be in the market with everybody else. And so I would say it's harder, but it's possible. And like Ivanhoe Mines was like, it was given away when I was visiting in 2014. They had huge assets, and it was no secret that there was a ton of fundamental value there, but the stock was like 80 cents or 70 cents it was even 65 cents at one point, and now it's 13 or $14. Next Gen traded for years that it was 22 cents. I remember it closed before its discovery, and it was trading at 40 cents for 2 years, and 50 and 60. Now it's $10. So the answer is yes, but if you want the greater leverage. Unfortunately, these junior companies are dilution machines. They're just constantly issuing new shares to fund their development, and it's very hard to get capital when there's not a lot of interest in the space like right now. And so, to attract investors, they have to give incentive induction to the private placement investors to give them money. So, like your average private placement investor is at an advantage to the public market investor
Mm,
because they're like I think the TSX Venture Exchange permits a 20% discount to the market price in a private placement. Maybe it's 15. But so you can get a discount in the market. You could get a warrant, which give you an additional, or the right to purchase an additional share if something good happened. It's a big advantage to be in
mm,
the private placements. But then you get the disadvantage of there's a 4-month hold. Maybe if it's a different type of financing, it can be life financings now are free trading now. But terms are typically better in the public market. But if the company is preserving its share capital and or has cash and doesn't need to raise money, then public market investors can be an advantage, and they don't have to um, do the private placement process. But my if I'm being honest, most of my allocation to the space is in private placements. I think
mm,
it's just difficult to get reasonable size investment deployed in the market without moving the price. And so, maybe the terms can be better, or it's easier to buy it. And I've been buying into private placements recently. That's how I'm like more scaling into the
mm.
space.
When did you start though? Because you mentioned that you've had five or so 100x returns, basically. Did you
Maybe I'm
start?
exaggerating. Right?
What's that?
I might be exaggerating. Like there's three to five.
Okay.
They, yeah, they might be close to it.
Sure, but were the like was that private placement or did you just buy in the market, never spoke to the CEO, just silently in the
Oh,
background bought, sold?
those were those were all those were well, okay. One of them was the the my bit starting the business that I did, right? And so that was my sweat. Another one was called Nexopic, which I sold early, but it was a very big idea. It was a private placement. I think it was a 5 cent share with a full warrant at 10 cents. And they had a big idea of developing flat lens technology. And I really liked the people involved. It's not a resource deal, but I put in a small investment. I wrote it off. I thought it was going to zero. And like they got that deal to like $4 a share. And if you had 5 cent share with a full warrant at 10, it was like I don't know, more than 100 bagger at the peak. That was a private placement in friends of mine that were starting a business. In the case of like starting Hive, which was my biggest commercial success, probably, I was building CEO.ca. I knew the junior mining playbook is like it's people, projects, and capital and these little penny stocks. And I was like, well, I think people want to do speculation in the crypto space. Why can't we do like a junior mining stock, but for crypto mining? That was the idea, and we started that business. And that was like a 200 bagger from the that was like a 300 bagger from the bottom to the top.
Wow.
And so that was, again, it was like more of a commercial thing.
But
Where
again, that's
else? Yeah,
founders shares. That's not just not doable for me.
the private
Unless I start something.
okay, it is doable for you. It is. You just have to be, at the ground. You have to use your relationships to be at the ground floor of something new, or come up with the idea yourself.
Right.
But that next topic thing I was talking about, like it was it was not my deal. I just was a friend who was investing in it. So there have been a couple others, which like Lithium X. Again, my friend started a deal and I was supporting him, and that was a 260 bagger.
Hmm.
And but I don't have scale returns like that from being a passive investor. But I do think 5 and 10 times your money is totally possible. Like look at Ivanhoe. I'm sure I bought Ivanhoe at under 80 cents. It's $13. I know I bought NextGen in the 30s, and it's 9.50 today. So those are very hard to hold. I mean, I think maybe you've seen the story I tell. Like Doug Ramshaw sent me this piece of Great Bear's drill core.
Hmm.
And this is from the Dixie Gold Find. They sold for $2 billion. Well, I had Great Bear stock at 10 cents and I sold it for 10 cents, right? And it went to $33 a share. There was nothing precluding the public from buying into that. It was 50 cents, it was $1, it was two, it was three. It kept going and kept returning. So one thing that I guess I wanted to share with you is that in the 90s, all these guys that were building these fancy houses on my grandma's street, as she was this little old lady, all the rich people moved in. Um, they were involved with one deal. There were like a couple of deals. It was Diamond Fields, the Robert Friedland, Voisey Bay nickel discovery.
Hmm.
And there was also like Lion Ore, which came like 15 years later. Ironically, both nickel plays. But if you were in the big deals, you had the big outcomes. And so I guess I thought about this, like if you were early investor in Diamond Fields, like Frank Juicer retired in 1996, and the public's story is that he was, since the market was at the top. I'm sure there was part of that, but it was also because he had just made hundreds and hundreds of times on his money on a deal that he didn't expect that return, and he was absolutely flush with money. And so if you're in the right deals, this sort of cycle defining discoveries and the big stories, you get the big outcomes. And so how does that happen? It's originally I was like, I don't know, how do I make sure that I'm in the next Diamond Fields? Like how does that happen? Because there's obviously hundreds of deals that don't work. But I'm just telling you, like I'm a very average IQ person who doesn't have a technical background in the mining sector. And I wasn't born with special privilege into these brokerage firms and relationships. Like my parents had nothing to do with this business. And I found myself I was in NextGen when it was a binder. I was beside the company it was created. I had an investment in the deal before they had their discovery. I had the 10 cent stock in in Great Bear. I had, the Lithium X and the Hive. I had like it's incredible if you're tuned into the space that you'll get a ticket to all these trains. And I don't mean to brag. I'm not trying to brag. I'm just saying like it can be done if you're focused on the space. And like Ivanhoe was hidden in plain sight. And I think I missed the Filo del Sol or the Vicuna mining district the last few years. But I remember Lucas Lundin banging the table on a thing to me 10 years ago. And it's if you're tuned into it, you will find yourself in the right place
Mm.
in these stories. And especially if you're taking small bets and gambling. And so if you're a regular investor, how do you have an edge? I think you probably have to do um, I think it's rare that people that don't make a commitment to knowledge and uh, passion for it, it's probably rare that they get a great outcome. I don't think like it's a great place for dabblers. But there's a million different investor demographics. Some people much smarter than me, they are coming into the trend. They see this uranium thesis. They put size on and for different reasons that I do. I'm more like trying to plant seeds when no one cares and support good people and see things, see patterns, see projects, and try to, like think about like this, like if you're talking to one guy and he has a project that's not getting any value, and you interview, like I just use this Paul Matisic analogy of he was a Lithium X executive chairman, and he had sold like 5 or 6 companies in a row, right? And the same asset in the previous company's hands was worth $2 million, but in Paul's hands it was worth 265. And so like the same project in different hands can have dramatically different value. And knowing who the stronger hands are and having access to them, you can put these things together. And I think um, that's one place where, there's lots of money. So
I like
I
the Ramshaw story, by the way. I recently interviewed Doug. I believe he must have been the last video I've uploaded, something like that. But and why I like it is because it shows that even still, even getting a deal from a broker or a friend or whoever it might be, it's no excuse for not doing your own work, your own research, right? So,
Well,
um,
but you can't do a lot of research. Like to buy a Great Bear at 10 cents, there was no fundamental reason to do it other than it was good people. Sorry, I should say good people and price.
hmm.
It was a bear market, and there were a lot of good people at good prices. But that was Doug. He reached out to me. He said, do you want to do this? And I had the attitude of like I'll back anybody good at an early stage, and because it was small ball money. It was like I didn't have any kids, I didn't have any risks, and it was just like let's I'll try anything. I want to if it's an early opportunity at the right price, like and I think Great Bear's first funding round was like $2 or $3 million market cap.
But how do you even know? I mean, you
You
say
don't.
you would back good people, and how do you choose who to follow in the sector? Like, I mean, let's take Frank Juster, for example, right? Clearly a very successful entrepreneur. He started anything from a movie studio to a blockchain to a bunch of gold miners, whatever. He's all over the place. He's giving talks. He's a billionaire, whatever, right? But you open up Twitter, you open up even CEOCA, you're gonna see all sorts of arguments and accusations against whatever that he
Yeah, and
does,
they're
right?
all they're all they're all well they're all true, right? There's great arguments against, there's a lot of failures in the past of
Mm.
all the icons in the business, and Robert Friedland's Ivanhoe Energy, whatever, for example, or like the resource business is full of past failures,
Sure.
and that's why it's better for someone that doesn't have much to lose, because once you're investing size into the space, what it can give, it can take away too.
Mm.
Um,
No, but how do I know? That's the point. Because if Eric Sprott comes to me in 2021 and he tells me I've got this great deal, it's called Red Lake, do I follow him?
okay, well, so West Red Lake Gold, like he was on a podcast in 2020 with the CEO, or not the CEO, the chairman, Marco Day, who I think he's a great guy. And I think Sprott's really cool too. And they were on a podcast, Meb Faber show, and it was $3 a share, and it was a billion market cap, and they were singing its praises because that's their job as the corporate, and the investors is their, they believe it. Eric had hundreds of millions of dollars invested in it, and so if you're around the space, you know that the management's always bullish. That's their job, right? So discount that. But what I would have thought about that story is like, okay, great. I mean, I wish you guys well. I like these people, but it's a billion market cap. Like I don't, it's hard to get a huge return on a potential 100,000 ounce mine that's already valued at $1 billion. I know that because I've looked at all the other small mining operations.
Mm.
But when Frank Justra bought that mine for $6 million in shares 2 years later, it's like, yeah, I want to try to go on this, even though the mine failed. It failed for a number of reasons that hopefully are going to be able to be overcome. But buying it on the restart, that was more sensible to me because it was a pre-money value of $30 million or something like that, and it had 300. So there's just a basic reference point for me. It had $350 million approximately of sunk costs in a new mill and all this work that had been done, and it's trading at 30 million. It's 10 cents. It's a mine for 10 cents on the dollar at the time, right? I like buying. I like when the historical investment is much greater than the current market valuation. It may suggest that the project didn't work. Of course, it suggests that the project didn't work, but like Sabina Gold and Silver, I was a big supporter of it in 2014-15, and they had spent 500 million and had a 50 million market cap, and they ended up selling it for $1.1 billion or something like that last year or early this year. It took a lot of time and it took a lot of dilution, but this is the a project that has a lot of historical knowledge and historical investment that may make sense at a higher commodity price. If you can buy that right, and the management is committed to marketing the story and preserving the share capital to the best of their ability, then like that can be a sensible speculation, historical investment. Now, fast forward, Red Lake has gone from 35 cents to 70 cents, and the share count is increased by 4 times because they had to issue shares to acquire the project. They've raised $50 million. Now it's 100. The stock has doubled, but the valuation's up 4 times, or the market cap's up 4 times, which suggests that as the value is growing, the shares are growing faster. So that's a concern. Now it's 130 million market cap. Still a long way from when Sprott and O'Day were promoting at $1 billion market cap, but it's a different investment now than it was at like 6 million going into it 8 months ago. I'm still a fairly big holder of that story, but they need to get the capital that they need to restart the mine, and they're on a treadmill of they've raised $47 odd million in 7 months. It's expensive to keep that concern going and to address the risks of the past and get that mine turned on. And it's in the show me stage. And I think like it seemed like easy money buying it at 35, and now I still see a ton of upside in it, but
But
like
that mine is banked for practically every company that's touched it.
And most mines have, right? It's also not a massive mine. Like you've had Rick on your program saying like the big returns come from the big mines, but I think it can be a good profitable mine, and I think if they can prove that what's on paper in the feasibility studies can translate to a couple of quarters of earnings, I'm sure it's undervalued. Now just getting from here to there, that's the hard work, and they've got good people to do it. But it's complicated. And Sabina, it was 50 million market cap when I bought it, and it sold for $1.1 billion, but the stock was only up like 5 times, and the market cap was up 20 times because there's dilution, and that's a winning story. But all the biggest risk for all these deals is how much of the company are they going to have to sell to finance its progress? And if the market's bad, the dilution is really bad. And if the market's good, access to capital eases up, then, then the promoters and entrepreneurs behind the deals can thread the needle. But it's very difficult to be a buy and hold investor in the junior space because of dilution.
Mm.
And I know all the company people, they want long-term shareholders, but the history has shown that it's not smart to be a long-term shareholder unless you've got one of the 1 in 100 discovery stories and we never know what we're going to have.
That case,
So
still there's a lot of dilution. But I want to go back to who to listen to, or how to know who to listen to, not specific names. I mean, if you want to throw specific names in there, go ahead. But and maybe also talk about how much importance to put on that person, on that promoter. Because again, we can go back to the sawmill operator, the doctor, the lawyer, the accountant, whoever it might be. They come back home from work, they watch an interview, or they read a newsletter that they paid for. They just want to do something with their money. They don't necessarily have the time to think about the specific deal. Is it overpriced? Do the rock make sense? Is the geophysics right? The drill target's good? Is this a VMS or not? What is a VMS in the first place? Right? I mean, who wants to deal with that? There's not many people who want to deal with that. And they just want to follow someone. And sometimes it works out, but sometimes it doesn't. So how do I increase the odds for it working out? For the odds to be my favor.
you're asking like who to follow, how to know to follow.
Mm.
I don't blindly take tout from a industry person at face value. I like I said like a minute ago, all insiders and corporate people have a conflict of interest, and so we have to discount their opinion for the fact that they have, they're trying to build the business. So I'm not going to take any promoter's message at that face value. I have to discount it and put it together with the other information, such as what's the price? I don't mean the share price. I mean, what's the market cap? How much cash does it have? I put it in context with other companies that are like it. Do they have a plan to lower their cost of capital to market the story and to, can they raise money? Do they have options to raise money with selling a royalty, or are there, wealthy, influential investors that will support the company at higher prices? I have to generate my own ideas. I'm not taking them blindly from other people. There are a few guys that I do think are super smart and that I will happy to run with what they think is a good idea. But I'm generating my own ideas for the most part, and I take each piece of information that I receive and I put it in a matrix. I mean, this is making it sound prettier or more impressive than it is, but I just put them all together in a form of decision, right?
What are those? What are those metrics? What else do you look at?
Well, like I said, okay, price is the most important thing, right? How much is the stock worth today, and what could or should it be worth? Like if it's pure gold at 100 or pure gold at 1 billion, or West Red Lake at 30 million, same assets, more knowledge in the Red Lake thing. It's only 2 years apart. So the price, the entry point gives you the most leverage, right? If you pay, it's a lot easier to get 100 bagger from a 2 million market cap going to 200 than a 200 million market cap going to 20 billion, right? It's very more realistic. The lower the price, the greater return. However, at the lower the price, the higher the risk, because it's probably has less work done to it. And so number one is price, and two is people, and do the people have access to capital and a plan and to grow the share value, and do they have alignment of interests? Are they, if you look in management information circulars on CDAR Plus, you can see there's issuers that sometimes that the CEO will get more money to be fired than he will if he sells the company at the current price. Change of control provision could be greater than the equity incentive. So, alignment of interests. Okay, so good price, good people, alignment of interests. Do they have a plan to market the story? Because like one thing that's really changed in the 10 years that I've been around, and I'm obviously biased because I'm a marketing person, but institutional investors now want the companies to market. In the past, it was like, oh, promotion's bad. But it's like, if these companies don't create awareness for themselves, they're pre-revenue stocks, they don't have They don't have analyst coverage for the most part. If the companies don't create awareness for themselves, there's no market for the shares. If there's no market for the shares, they have way more expensive cost of capital. The share price goes down and they have to dilute themselves more to raise money. So now you see institutional investors ask the management, ask the CEOs, what is the plan to market the story? So like, I want to know that this company has a story that can spread. That's incredibly important. Like, does the story resonate? Does the CEO, like, there's no better story than Ross Beattie's track record. There's no better story, right? So anything Ross is involved with has a message that could spread. And like, if there isn't a story, can the CEO make one that's compelling enough? Is he smart on his feet? Does he have charisma? Does he have the desire, or she, to get the message out credibly and to do it without ruining the share capital? So I like, I like to think, is their story worth spreading? And do they have a plan and an ability to get this story in front of broad markets? Like, there's so few people that are focused on our business. Like, this is why I really like it, is because it's easy to be a big fish in this pond. There's, I don't know, Luke Tenhave and I were discussing, there's like 10,000 or less people who are paying attention to this space. Like, I don't know how many it is. CEO.ca covers all stocks, and there are millions of people using that site. But I don't think there are 10,000 people focused on the junior space. Like, so do you want to be, one of 10 million guys buying, tech stocks, or 100 million guys, or one of 10,000 in this space? I think it's easier to have edge because there's less competition. I think that's fair. There's also less upside compared to the tech space. But that asset quality, what's the history of the past investment? What are the fatal flaws? How are they addressing them? And, but it all comes back to, do I like the people, and does it fit in with the price? And is there a plan to communicate the story? So the reason I said there's only 10,000 people focused on the space, like, I just picked that number out of my head. It might be less, but there are a billion plus investors out there, right? And if an issuer, like, for example, last week, there was a deal called like Neotech or Max Tech or something like that. My friends run Defense Metals. It's an incredible rare earth deposit in BC. It has a 40 million market cap. They're not focused on promoting the stock, and it's to their detriment. Okay. But that's the deposit. There's an area play that's like near it that's now got an 80 million market cap, and it doesn't have the history of work, the capability of the team, the people. It's not done the development. They've just got better promotion. They're promoting the story to people that are on the thesis of rare earths. They're doing a better job of promoting the story than the real deposit next door. And this just goes to show, like, there are billions of investors out there, and most issuers don't know how to reach them and don't try. And it makes a huge difference to your market price whether you can reach those investors. And now this is like, this doesn't last forever. Ultimately, defense is the real one. And unless there's new discoveries on their ground, I don't know. I'm not trying to knock it, but I think at some point these things will even out, and defense will be the mine. And I don't know enough about the other story. It's super early stage, but the fact is, if a company can tap investors outside of those thousands or 10,000 people that are focused on the junior space every day, we're all tired and beat up. We don't want to buy another stock. But if you can capture the imagination of all the other investors out there, your stock's going to rip, And so companies that can do that, that's exciting. And that fits into my promotion, people, price, project formula that I'm not inventing. I'm just, parroting what others have pioneered before me. So,
Right. So people, asset,
price,
have access to
promotion.
capital, and then at a reasonable price, all of that. So if I come to you with a $1 billion explorer, no resource yet,
I'll
you're
say
not going to immediately say
congratulations.
no.
I'll say congratulations. It's very unlikely that I would buy it, But there are everybody's got their own investment criteria, and it was smart to buy NextGen at $1 billion market cap. Now it's 5, right? And what's a $1 billion market cap explorer today? I think it's like newfound gold. And there's a big market for it every day because people think it's a lot bigger. But like I want to, I'm more interested in, for example, Earth Labs. Not that I'm like buying the stock right now. I have a lot of shares, but they've got a royalty on part of it. They're trading at cash at a 22 million market cap. It's just like that's a little bit more interesting.
Hmm.
Not that Newfound isn't great and could, do a lot better, but I just like I want to be in an earlier stage, greater leverage situation and let other larger investors take on
Right.
those different
How
assets.
do you deal with the geology though? Because I mean, you're not a geologist. I'm not a geologist either.
I
So,
think it's an advantage that we're not. Like,
hmm.
I'm just kidding. You don't need to be a technical expert in our space, and technical experts oftentimes preclude themselves. They poo-poo things that do work. Like we had geologists, like real geologists, tell us that Lithium X was a scam, and it was sold for $270 million, and it's like one of the most valuable lithium assets in the world today. And like just because one geo says no doesn't mean it can't work. Just because one says yes doesn't mean it will. So like I have enormous respect for technical talent and I call them for feedback on ideas all the time. Like I want to know about a methane gas project, I'm going to call the methane gas guy. I want to know about a VMS. So like that's the biggest value of a network is being able to get relevant expert insight from people. But again, it's like I'm taking those into the matrix of, okay, does this perspective fit with my thesis? But I'm not taking anybody's word as God. I'm making my own call. And one thing that's so valuable about having technical friends is that they can give you a nudge about a project. Like I had, Rob McLeod. I was like contemplating doing the K92 mining deal at 35 cents with the full warrant at 45 cents. And I was like, I don't know. I think like I was like, I think these guys are going to get eaten alive in Papua New Guinea. And Rob's like, you just in a one sentence said, no, that's a very good project. And that was all it took for me to to do the deal. And like it's a 50 bagger or something like that. It was just like one line that I was on the fence about. And he said, yes, I've also heard Rob say, you know, there's a project of interest in that portfolio that's not valuable, that's involved in creation of a new company. And I wrote a story about John Mark Stouty at a conference once told me, oh, that asset, which was trading at a 700,000 market cap, that's a real project. That like just those little tidbits, I put that into the matrix. I come back and 6 months later, I'm able to participate in that asset. And I should be mailing royalty checks to the technical people that give me those little insights. But I
What do you
find
what do you end up with a portfolio with like 50 stocks in it then in the end?
no, I don't know exactly how many I have, like maybe 30 or some 20, 30, maybe less. I'd be happy for it to be less, but like I'm taking small bets on like where could something blossom? I am not, I'm not like you don't want to advertise like I'm not like that loyal. If I make the money in the stock, I want to turn it into cash
Hmm.
and pay tax and buy something safe. I do.
Right.
So,
What do you think is a
I'm
good number? Like you said, you want it to be less. How much is how many is a good number?
I don't know. I think ten is probably sensible.
I
Um,
like that.
10 or 20, like ultimately like the longer you're in, the more files you're going to have. And you start, everything should make sense. You shouldn't buy 20 names because you need diversification. You should buy one thing that makes sense at a time with not too much capital that you'll be wiped out if things don't work out. And you have to sort of stay on top of it. But
How long do you normally hold your stocks for?
it depends. Like, Meridian Mining, I'm in this thing for like 3 or 4 years, and Eros, I've been in it for 3 or 4 years. Those are my two biggest mining stock positions, and I like them. That's why I haven't sold them. In hindsight, I mean, Meridian ran to $1.25, and I didn't sell it, and now it's 35 cents. And so, I make mistakes all the time.
Hmm.
And in that case, I was close with the management. I really like them, and so, the old, disloyal sell the stock and move on thing. I didn't do it because I liked them so much, and it might have hurt my objectivity a little bit, but I still think there's value in it. And sometimes it's 2 weeks, right? Sometimes it's 2 weeks, sometimes it's 4 months and a day. Like I'd like to hold something as long. I want to be at risk. I hate being at risk. I'd like it to be at risk for the shortest amount of time possible, right?
Mm,
Um, so I've got a few exciting things. Like I put a post on X a few months ago about Blue Pearl. Like one thing I love reading histories about the junior mining sector, and there was this story, Blue Pearl, that was I wrote a story called like How to Get Rich in Mining Without Discovering Anything, and it was about how Blue Pearl played the molybdenum bull market, and the stock went from 10 cents to like $35. And it was like capturing all the headlines. They ended up buying a producing company, and they just pushed and kept growing and growing and growing. And it put me in writing the story, which I didn't know anybody, but it put me in touch with the people who are starting the deal, who started that deal that I'd never heard of. They're like legends to me. And now I have talked to both of them on the phone, the founders, and like they have a new deal like it. They're starting again. And like I made that story. I met some people. I got to participate in their new opportunity, and it looks on paper like it's like a 4 or 5 bagger already. And I'm super excited about it. This is just like the power of like writing and making content and seeing more opportunities and meeting more people.
mm,
But I have dogs all the time too, Newsletter writers don't really like to dwell on their stinkers, but I have made lots of mistakes.
mm. It's the only thing I've ever made. So I'm not hearing anything about
But
uranium
making your
though.
channel wasn't a mistake. Building the relationships wasn't a mistake. And there are some things that are intangible.
Yeah, it's a good point. And again, I agree with that as well. Again, not hearing much about uranium in your deals. Is that, well, it sounds to me, first of all, it sounds to me like you have sort of a bottom-up perspective. Like you don't start at the commodity level and then
Oh,
spread your portfolio. You start with the people, asset, capital, at a reasonable price. But I'm not hearing anything about uranium. Why? Is it because they're not at a reasonable price, or are you not seeing good projects?
here's the reason why. I I was it's a long story, and it's to my detriment, but I I was very good at my first picks in co.ca. Like the site grew on the back of choosing, like I was writing about Hathor exploration
Mm.
before it was taken out. And I remember I was like prospecting in the bush in Timmins, Ontario when the takeout news came, and I was like dancing for glee, even though I had $5,000 of stock. But I had great pulse in the Athabasca Basin. That's the Persian Gulf of uranium. And when Alpha Minerals and Fission made the PLS discovery, like my site had co.ca had 10 really cool exclusive articles about what was happening there and the background. And co.ca was like the place that NextGen was marketed in its first 2 or 3 years. And I remember NextGen was a binder, and I was really close to that story. Um, there are two things that happened. One, the uranium bull market is like, what's that phrase about, like, you know, it was predicted so much before it happened. Like we spent 8 years listening to, you know, people call the coming uranium bull market, that it was like there was a bit of fatigue. Like I had interviews about the coming uranium bull market in 2011 and 12, 13, 14, 15, 16, 17. Like it was kind of boring, right? And there was a bit of that. I was like, I'm tired of hearing the same pitch. And then, I had when you don't have any value, when you don't have any money and you're totally invested in something, like I had some conflicts with people in that business where I was fearful, resentful, unfair, and found myself in personal conflicts with some people in that
That sounds
business. And
like a story.
I was just like burnt out of, like, Athabasca Basin is a place for sharp elbows. Like
Who are we
everybody's,
talking about? Just give me names.
well, the Athabasca Basin. Look at the largest market caps in the Athabasca Basin. All right, like I don't want to gossip because I feel now as an older, wiser person like I was foolish. But the reality is, like, when I showed up in the basin, there was like Dev Randhawa had his empire, and then like these next gen guys were upstarts, and there was these fathers and sons that were really cool. Like the drama there was great, but people were cutting each other down behind their backs, and I was part of it. I was agitating some of the conflicts in my coverage. I had expectations that were maybe unfair with some of the issuers there, but we were so close to the story, and I had next gen, which was just such a great story of this business. But Lee Courier, the CEO, he had a vision of building a uranium major from day one, and he was going to do it through exploration, which is absolutely batshit, but he's pulled it off, and he's pulling it off. And they've just done a at the market financing to pay for their equity component, and they've got like a tier one deposit in a better market, fully funded, and it's incredible how far it's come in the 12 years. But I remember when it was just a binder, and I met him, the first time I was in town, and I was so invested in that story, and I was marketing it. We went to the site when they had their discovery. I remember stopping Lucas Lundin on the street on House Street saying, "Did you hear about the next gen results?" And like I was so invested in it. And a guy who was very close with me and was working with me went to, they were as they were transitioning into a larger company, we were in a position of like give some advice to the management. And we told this guy Travis, who was working with me, we said, go work there. And he's made a huge fortune for himself in
He's
being
still
the
there.
chief commercial officer or whatever there. But that process of like I just had a lot of baggage in the infighting between different companies in the space. And I was doing things I was marketing the story with expectations that were unfounded. I ran into some personal conflicts at the time with my expectations with Trav and with Lee, which the benefit of hindsight, like I fully understand you know why that happened. And it's very cool that it's such a great success, and a lot of value has been created, and the stock's gone from 20 cents to $10. And it's a 5 billion market cap that could be 10. But that process for me, like I was burnt out by conflicts and drama, and burnt out by people talking about the coming uranium boom. And I just stopped caring, right? I stopped caring. And so I've been underexposed to that sector. And to my detriment. I think I had sold some next gen stock at 260, and it's $10, right? And that was just because I was just done with the basin. I was done with all the people I've contributed. There was a time when I was fearful, and I was more um I was more of an asshole. And I I um I created some conflicts with people there, and which I wouldn't have done today. And but at the same time, it's like, wow, it's beautiful that you can be there at the ground floor of a $5 billion company. And it was a binder. I keep saying it was literally a binder before it
What does
was
that
even
mean?
this there was a property that was a binder that was being marketed in a binder. And they originally found one group to take over the property. Then that group reneged, and then Lee showed up from Australia, and he took the binder. And then Lee brilliantly merged with Mega Uranium's portfolio. And oh man, I got to go with Warren Irwin and Sheldon Inwintosh, who is the Mega Uranium chairman, I guess. We were at Arrow right after the discovery happened for Next Gen. And like Sheldon was a co-founder of that story. I mean, he had the ground that the Rook One discovery was, and sold it to Next Gen because he saw Lee had a bigger vision and other assets. And just the way this thing evolved from a binder to one failed deal to merging with a shell and taking on Mega's assets to, the luck that happened was that the Patterson Lake South discovery was on its border. And that happened just as NextGen acquired the ground from Mega. there's a discovery right next door, and
Mm.
all of a sudden, NextGen's huge portfolio became very easy to focus in on. Let's go right next door to where there's a monster discovery. It turns out it's even better on NextGen's ground, and it's been amazing to watch that evolution. But at the same time, like I got a little burnt out by everything on it. I haven't told you all the gritty details because I just don't want to. I don't want to dwell, and I am, I am. What's the word? I am glad to have been there and seen
Mm.
it all. Um,
There's a bunch
there's
of new
always a new
companies though.
train. There's always a new train leaving the station, right?
Well, exactly.
And
There's a bunch of new companies though in the basin right now. Some of them have been started by people who, like you, left some of the companies that you're mentioning here because they weren't happy with the way they were treated or the way everything came down. There's a bunch of new companies that have been started. So what, you're not seeing any uranium companies that sort of fit your people capital project at a reasonable price type of
no,
strategy?
no, it's not that. I guess I have a couple of like little positions, but I just I haven't got size in anything that I'm
Mm.
excited about. There are a ton of known projects um, out there. There's a lot of uranium out there, and a lot of the projects won't get developed. It comes back to the beasts in the basin are the biggest priority, and that's what's going to get developed first. And I noticed you had Stephen Roman on your podcast. He's
A
a
while
super
ago, yeah.
interesting guy. Have you ever heard about the story about his dad?
Of course, yeah. He started Denison.
His dad's uranium deals they're just legendary. I need to write about it because like it's just so incredible how like he, personally controlled Denison and he cut the deal with the government of Ontario to buy the uranium. At the price of uranium was like $40 in 1972. And now, I mean, I don't know, is it 60 something now? Um, but the price of uranium, it's a weird little commodity. It's not LME traded. It's not like, copper or gold or something that's just super liquid. It's almost like the end users are insensitive to the price to some extent, and sentiment is changing. So like uranium could have a huge run, but I just listened to people talk about, oh, uranium boom is coming for 8 years and got a little tired of it. And there's the saying which I promote all the time, which is like as long as there's no find, the noble brotherhood shall last. But as the piles of gold begin to grow, that's when the trouble starts.
Well, but
And
it's
after
here now.
it's here. It's here. But the best assets are already known and owned unless there's going to be a new discovery. And, like the people have been fighting in the basin for decades, and particularly it's been contentious and fierce. And things aren't, yeah, I just haven't seen the right opportunity for me yet. And that doesn't mean I haven't been that focused on it because I kind of feel like, like the best of the best are known and valuable.
Hmm.
And maybe next gen buys fission at some point. Um, Maybe next gen is sold for some huge number to, some oil and gas company, or I don't know. I kind of feel like they're gonna build the mine. But all the other little deposits, like what is Warren saying recently about it? Warren kind of poo-poos this space, doesn't he?
He he's got an interesting couple of months in the space because he basically went on a couple of podcasts, ran around uranium was at around $50. And right after he said that he's not as bullish, uranium took off. So that's what he's saying. He's still got two
Warren made
uranium
a
deals to
hundred
promote though.
Warren
Uh,
made $100 million on next gen, and if he kept it, it would have been almost 300,
yeah,
right? So
exactly.
do you cry about the 100 you made because it wasn't three? But we can one opinion doesn't make the trade wrong or that's the thing was like COs would get so pissed about like a bad comment on co.co this guy, but like one comment doesn't make the story. One perspective, there's a million
Hmm,
perspectives. Doesn't take
true.
that many buyers to drive a story higher.
I've had
Um,
CEOs email me after an interview saying there's a bad comment on your video. Do you need to remove it? So, I mean, it happens. I obviously don't remove it, but
so
it
you
happens.
send them the price sheet for the removal.
That's a business in and of itself. I mean, you can joke about that, but pay me and I'll never talk to you or about you, and you stay safe.
There's
That's a
probably
thing.
easier ways. There's probably easier ways to make money. You don't want to
Yeah,
be.
of course. I'm joking. Of course. There's also a bunch of bad deals in uranium though right now. And there's gonna be the number of that is gonna start
And
increasing as
probably
well. Is there
the bad deals can still make you a lot of money too in the short term,
is
right?
there anything blatantly wrong that you're seeing right now? Something that you say, oh, I wouldn't touch that with a 39.5 foot pole.
I want to. I keep a lot of relationships out here, and if you're too hard on people, it creates conflicts. And it's Christmas. I want everybody to be happy
Mm,
and make money. Um, I mentioned the defense metals is trading at half the area play right next to it. Like that's super obvious. Defense metals is a stronger story fundamentally than the area play that's twice as expensive. But you know the power of marketing can last longer and be stronger, and they could end up buying defense if their currency strong enough. I have no idea, and they could evolve into new discovery. So I don't want to like I don't want to poo-poo anything. Most of the space is untouchable. Like you don't want to buy. This is not where you inherit your family fortune and put it all into junior resource stocks. They're all serially diluting pigs for the most part, with occasionally exceptional outcomes. Um, but I'm a no to all stocks mostly in this space. Like I'm a no to everything.
mm,
And it's like maybe suspend disbelief at certain occasions, but just
mm.
assume that I would have something negative to say about every stock, as would you, right?
It's true.
And you know,
You
so
when we were talking earlier, I don't want to hold you all day, so it might
okay.
sound like I'm jumping through topics, but when we were talking earlier, you told me that you've got some Howie Street secrets. What was that
House
all
Street
about?
secrets. I got a lot of House Street secrets, man. House Street is the Vancouver equivalent of Wall Street. The Vancouver Stock
Mm,
Exchange was on House Street, and a lot of mining companies. There's hundreds of mining stocks that are within a 2 block radius of House Street and Pender. If there was Gianni Kovacevic, my buddy, used to say, like, if there was a bomb went off in the middle of the junior mining business, it would be at the intersection of Howe and Pender. Um, but what is the secret of this space? It's really what we talked about earlier. It's like the brokers, prospectors, and promoters are the ones that are making the most returns, and that's obvious. It's a business of a lot of wealth is created starting new companies, not finishing old ones. There's there's a lot of different interests where if a broker or promoter or property vendor's objective is to get a large share position in a deal for free or close to it, and that puts them at odds with the investing public. And I encourage people to become industry insiders because it's a great way to make money. But if you're just a passive investor, you just have to know that it's a very inefficient, difficult space, and you're gambling. And if you are lucky enough to get a nice profit, it's on you to turn it into cash. I think the business for Vancouver people is about getting new share positions in promising deals and then selling them into
mm,
cash, turning them into money. So finding a management team that have alignment of interests and integrity, like somebody like Zach Flood from Kennerland. I think Kennerland shareholders, of which I am one, are very lucky to have Zach, because he could be enriching himself more so doing the deals he's doing for Kennerland, but for himself, and he doesn't, because he's a principled person that I love that guy. And sometimes scams make a fortune for people. Sometimes scams turn into real businesses. Um, but yeah, it's a difficult place, and I like it just because I feel like I'm not that bright, and it's an easier place to compete. Um, I have more thoughts on the subject, which I'll talk to you about in a forthcoming interview.
sure,
I
that
have to
might be
check
an
with my
interview in and
lawyers.
of itself. A bunch of other things you just like secrets, and you said that you have newsletter writer secrets too. Um, so
Yeah, I
there.
mean, I had a newsletter writer friend who I love, and I won't out him, but him or her, I won't say who it is. It's a
Well,
him.
you're not giving me many names here.
Well, there's I don't want to draw negative attention to people. But friend of mine told me like, okay, the business of a newsletter writer is to create a storefront for cheap stock. So like they're a newsletter writer in the broad sense of finance is trying to create investment recommendations for the subscribers that grow value for subscribers. But in Vancouver and Junior Resource, a newsletter is an excuse to get bribed to promote something at a higher price. So if a newsletter for a nefarious person is a storefront for cheap stock, it's a magnet for opportunity. Like because we all want to get opportunities at the earliest stages at the cheapest prices, and a newsletter is a magnet for opportunities that may mean that a newsletter has a conflict of interest when they're writing about the deal to subscribers at 70 cents and maybe they're in it at 20 or 5. And
Mm.
so that's something to look for is just like is in the disclaimer, have they just communicated what price they acquired their shares? And if it's missing, maybe you can make that assumption because typically deals are started at 1 or 2 cents and funded at 5 and 10 by close hands. And the promoters are going to invite people that can support the distribution of the story and help grow the company. And so if there's a problem with alignment of interest, sometimes it's not transparent. Another secret of newsletter writers is there are a lot of great ones that I love, but a newsletter has to promote its track record, and newsletter writers, it's easy to get lucky in a penny stock, right? It's not like you have to be a genius to pick a 5-bagger in a penny stock. Sometimes you just get the market right and it works, but newsletter writers justify their existence by talking about their winners. And the best label for promotion is research, not promotion. And so these some newsletter writers are always telling you about how great they are, how amazing their track record are, and they gloss over the million mistakes they've made or bad calls they've made. So just like a management team, I discount everybody's opinion, and I do find that there are principled good people. Like I like Eric Coffin and Gwen Preston. I like getting information from as many sources as possible and putting it into the filter.
Mm. Well, you mentioned two newsletter writers, and you should look at the totality of their returns. And again, of the good and the bad deals. Not many of them just have a lit. Like for example, someone who I interviewed a lot, Lobo Tigre, on here.
Great
He's at
person. Great person.
independentspeculator.com. He's got just all of his trades with broker receipts and all that, starting a given point. I don't know exactly what it was. He's got it all on the website. You can see the winners, you can see the losers, you
I
can see
think
the
he has a great
average.
track record too, right?
Yeah, yeah. Well,
And he's
definitely
not
as
a
of recently.
geologist.
What's that?
Like he's not a geologist, I don't think, or is he?
No, no.
But he's amazing writer. He's done all the work and deserves it, and he's transparent. I love his brand, and I think he's a good person.
But the point was
So
that not many of them do it. So he's got it. Not many of them have a full track record of everything they've ever done over the last. His track record here starts in. Let's see.
Joe Mazumdar
Yeah, it's right.
does
Yeah,
exploration insights,
I agree.
and
Yeah.
those exploration insights are to probably the most technically competent people. But when they're that technically competent, they're more risk averse and they do miss things because they are. And so their actual average return is probably lower than Louis James's, but they're going for a more risk adjusted
Mm.
approach. But like there's things that Brent Cook wouldn't have touched that I made a fortune on. And he wouldn't write up Lithium X in his newsletter, but he bought it and did really good on it because it has things that make it to their letter have to have more thorough technical due diligence. And oftentimes, if the technical questions have been answered, the price has gone up already. So again, no one's voice is God in our space. And the takeaway is like you have to have your own voice and your own opinions and use other information as inputs
Size of
to
the
it.
newsletter I find matters too, because you're mentioning the deal with Joe Mazum there from Exploration Insights, and the thing is that if a newsletter has too much influence, sometimes they cannot enter into a deal without front running themselves. And it seems like I'm promoting Lobo. I'm not being paid to do it or anything like that. But what he
I like
does
Lobo.
is he would announce whatever he wants to be buying like a week or 2 weeks or whatever before he starts buying it, so that he lets himself being front run by his audience as opposed to the other way around. Because when you have a big newsletter, if you say I'm going to be buying that at, let's say, $1.50, you're basically giving level 2 data of a whale to someone, and then they can see they can basically front run you, right? And it becomes tricky if it's a low volume stock. The stock is gonna,
Well, is the
sometimes it can.
newsletter writer really an independent analyst, or are they a stock promoter, right? And I think Lobo is trying to be an independent analyst, and he's trying to make money from his subscribers, and
Right.
his track record is his skin in the game.
Mm,
Um, but like if I'm a promoter, I want to buy, and I'm calling myself a newsletter writer, I'm going to buy it first and then tell the world about it.
mm,
So that's unique. Lobo's unique in that sense. It's a very tough business for a newsletter writer because it's so cyclical and has its booms and busts, and it's not scalable. It's easy to show 20 people the opportunity, but trying to get 500 or 1,000 or 2,000 subscribers, it's impossible to pay the same price because they're going to affect the price if they're buying that deal. And is if you're writing it up at $1.50, if it moves to 3 on the back of your newsletter, is it still a buy? Well, it's a very different
mm,
fundamental. So that's why real big newsletter firms are not focused on our space anymore because it's too risky and not scalable. They want to sell tech newsletter that 400,000 people can buy, not
mm.
this little thing. And that's why it's inefficient and hard. And um, that's why a lot of the newsletter writers are promoters.
Yeah, that's a very good point. We've gone through a bunch of topics. I was even thinking about what to name this. I have a bunch of titles for it, so it's been fun. We should do this again. Is this something that you came here hoping to talk about, but I'm failing to bring up?
I would just like to tell people that like I'm very passionate about writing stories about small cap wealth creation on thebigscore.com, and I would encourage anybody listening to subscribe to thebigscore.com. It's free. There is a premium subscription. I'm not doing a ton on it, but I'm not trying to be a big newsletter writer. I love like synthesizing discovery and wealth creation stories from history and telling them in a fun, compelling way because it just puts me in the flow of information, and everything that I learn, I write and share, and you can have it for free. I'm on Twitter, Tommy Hump, and welcome to engage with anybody there. And I like, I like what you're doing. I hope to stick around the space. I want to prove that we can win again and hopefully do it together.
Hmm.
Um, and anytime you want to chat again, let me know.
You say
What
you write it for
what
free,
should
but
we call it?
nothing's really free, they say, right? What do you get out of it? I mean, what do you do it for your own pleasure, or?
No, I'm very, I mean, let's be honest, like I do it because when I when I sold CEO.ca, I had, we had hundreds of thousands of people a month on this website. I was a center of influence in the market. Everybody wanted to, I shouldn't say I'm overemphasizing this, but like I got a call on a lot of early stage stuff and I was in the flow of information. But when I sold the website 2 years ago, I didn't have an excuse to be in the business. And I just felt like I want, like Porter Stansberry said in an interview, like I only know one way to work, it's full tilt. And if I'm out, if I'm either going towards my next 10 bagger or away from it. And by writing, it's putting me in front of all my peers. It's forcing me to become a better writer. It's getting me more pattern recognition. Okay, this is what happened. This worked here. This project over here. This boomtown. This people. You can see stuff from history and bring it to the present. And it gets me in front of the space. It gets me in the knowledge of how these things worked in the past, and it makes my phone ring with opportunities. It's like completely self-serving, and I'm obsessed with it. And I wish I had 35 hours a day to do it because like it's super fun for me to unpack these old stories. Not that many people care,
Hmm.
and I want to evolve it. I want to improve my ability to communicate, and I got to practice by doing that. But if I don't write, what's my reason to be, right? You can still make money, but I wouldn't be working as hard, and it just forces me to be in, you know.
Hmm. Hmm. That's well said. It's a good point. So what's next? What's next for Tommy Humphreys? Or anything secret? And we were talking about secrets here. So anything that you're doing
Um,
in the background? New startup?
I mean, I always have harebrained things moving forward, testing hypotheses, working on new interviews, trying to get things off the ground. What's more of the same, more storytelling, hopefully more compelling early stage investments. I want to create content that people value, and make some money for myself, or have another child on the way. I want to, just I want to succeed in the space, save my soul, and have some fun with my friends and peers for the next generation or so, because I'm 38 now and would like to, you know, it's fun to work. It's no fun being retired, semi-retired. I tried it. I went to Palm Springs and played golf with the boomers and got bored very quickly. And I love this space, and just, want to find a sustainable way to be in it and benefit when the market gets really good. And I sort of, my intuition's telling me it's getting better. So
Very well. Appreciate you stopping by, and we'll catch up. We'll catch up soon.
my pleasure. Thank you, Antonio.